Good afternoon. This is Dyer from Divergence Analysis. We are looking at the DVAN SmartLines indicator package available on the TradeStation trading app store. Looking at the euro dollar on a 60-minute and 15-minute chart using two time frames. I like personally use time frames that are about 1 to 4, 1 to 3, or 1 to 5 ratios. So 60 and 15 would be a 1 to 4 ratio. This is a move that occurred June 16th, Thursday. I'm Eastern time. So looking at a 60-minute chart to develop the overall trend, look for trend changes and where we would want to begin looking to enter a trade. We see the rules-based system that divergence analysis offers line up to indicate a short trade beginning at 5 a.m. in the morning Eastern time. As we see, we were in a buying cycle as indicated by the green shading in the cycle lines here. We barely break, but we break that buying cycle, which means ultimate support has been broken. On top of that, we have the red price bar showing that selling pressure is dominant at this point. The short-term indicator in the middle panel here has not only turned red histogram, indicating a short-term downtrend, but the leading line, which ultimately shows us that the force is beginning to confirm that trend, has broken through the zero line. The long-term trend eventually does move down, but at the point, it's coming from a very high overbought level, moving downwards. A couple bars later, we see it enter into a longer-term downtrend. But the conglomeration of red price bars breaking through support, leading line breaking through zero with a red histogram give us enough indication using the DVAN SmartLine system, and I've highlighted this with a red arrow there, that at 5 a.m. we would be looking for a more precise entry point to get short. Looking at a 15-minute chart for a more precise entry point, you could obviously do this with a 30-minute, a 5-minute, or even a little bit quicker time frame. This is the 5 a.m. Time on the 15-minute chart on the same day. At this point, we're already progressed into the selling cycle. As you can see, it's been a selling cycle for at least an hour. The histogram is red and negative. The leading line is negative, and the long-term indicator is also already in a bearish bias. Especially considering that price is working under the cloud or under the cycle at this time, that's indicating that the force is really to the downside. There's no consolidation, and this would be a good time to enter. So moving over to the 15-minute to manage the trade that we see as a larger trend in the 60-minute model, we would follow prices down and follow this move down as a short trade as long as we were continuing under the cycle. As soon as we start working within the cycle and seeing green price bars, this is a good point to start protecting the profit that you've made in this trade. Using the pivot line, which is the middle line here, that shows ultimate point of support and resistance. So at this point, it's good to go ahead and trail with your pivot line, making sure that you don't give too much back if the trend does start changing. A meltdown occurs, some further sell-off. At 10:15 a.m., a little bit after the U.S. Open, we start seeing green histogram bars coming in the short-term cycle. That's telling us that this could start developing a bottom. This could start turning around into an uptrend. Ultimately, our point of resistance would be this pivot line. When we do cross through the pivot line, this would be a great place to exit, to take our profit, and to look for a reversal trade. One thing that helps us identify the potential for a reversal trade, especially after a move of this magnitude. This was, I think, over 100 pips. A move of this magnitude, we would see oversold levels with the indicators getting a lot farther, if you go back historically, a lot farther down than they normally do to the upside and the downside. But one thing to look for is as these cycles expand, that shows force continuing in the downward direction. At 11 a.m., and you can see at the very top of this chart, the top of this cycle starts moving back down towards prices rather than expanding. That's telling us that at this point, at this hour, 11 a.m., we're starting to see some contraction. And at a majorly oversold level like this, it's a good time for a reversal trade, thinking that the prices are at least going to continue back towards the mean a little bit and regress from this major move that they've experienced. So looking back, here's 11 a.m. We want to start looking at this point for a potential reversal trade. Once again, we'll use the 15-minute for a more precise entry. Looking at the 15-minute, we would see the accumulation of indicators that we want to see to go long. We see the green price bars, we see the green histogram. We really want to wait until 12:15 if you're looking back on your own chart, 12:15 p.m. Eastern Time. As we break out of the cycle, the leading line goes positive. Green price bars is a great place and great place to expect some follow through if we enter long at that point. Once again, once we're long, we want to look and be patient as long as prices are working outside of the cycle. Once they come back into the cycle, this is where we get more interested in protecting our profit and bringing our stop up to the pivot line. Ultimately, we'd get out again for a nice profit. This is a big move in the market, and these were some examples of ways to trade in and out of a bigger trend as identified by a longer time frame using a DVAN SmartLines package. If interested in taking a trial, please contact us at dvansmartlines.com. I'll include the information in the comment section of the video. Thank you and have a good day.